So should we have some board discussion, and then when he
I
does
think
arrive,
if we-
invite him to speak?
If there's time, if not, I think we'll,
I'm more than willing to do that.
Thank you.
That's fine. So is there an agenda for the discussions? So are there any salient sort of concerns or issues that we need to discuss before next week's vote? Or any other issues? RB?
I just looking at the price index chart, I think was really, really helpful for us. And I'm wondering,
Let me make sure.
Right.
Does everyone have it? Go ahead, sorry.
so just, I guess maybe to you, Andrew, just, I actually don't know how far back your tenure goes. How far have you been?
I've been here since '92, so way back.
Just you've been back since '92. So I'm wondering what the conversations were when you had like negative PIOCs, like in 2002. There was with a negative price index, and what was the conversation to get to a 2 and 4%? Like why, when you're seeing the price index so low in the negative range, did you what was the analysis there?
Yeah, I think that some boards in past years and during that time period, I believe, sort of kept guidelines that were sort of, if you were charting it, so if you see expenses go way up, or in this case where they went down, the board tend to sort of have a smooth line down the middle, not to fully compensate owners when expenses skyrocketed and when they declined, not necessarily set guidelines that were a rent freeze or a rent rollback. So that sort of was their thinking, and I think that in that year it was 2 and 4. If you go to the year where it's 16.9%, which was the following year, the guidelines were 4.5 and 7.5, which if you ran that through the commensurate would have been much higher. So their thing was, okay, we're not going to cast all those costs onto the tenant, and then likewise. So I think that was their thinking and their rationale for what they did, and so there was more of I guess, a smoothing of the increases that they did.
Harvey, it's a fairly common instrument in finance and in operations and ownership to have in public companies. I think we talked about this last year. Public companies do this where they smooth out revenues, operating expenses, earnings, so there isn't such the volatility in both the cash accounting may be different, but the way that it's digested and the way that they make earnings decisions are on a much smoother basis, so that you're not getting this crazy volatility. I mean, like I'm looking at like the PIOC, just the regular PIOC, not the core PIOC, and you said that it's, what are the two things that get pulled out between the PIOC and the core PIOC? It's fuel.
Well, there's two expense items, but they're both the same. It's fuel for heating buildings. It's pulled out of the, and that's not included in the core.
It's interesting about the PIOC. Any person who sort of has to deal with numbers on a day-to-day basis would go crazy with this type of volatility between the numbers. The swing is so tremendous in a commodity product like fuel. And when I look at the core, that has, it's not, that's not even artificial smoothing. That is truly eliminating the way the commodity markets work. And I feel much more comfortable personally in sort of the core vernacular because it takes out those outliers. And that goes both ways, both for operating expenses going up and operating expenses going down. And I mean, I spent so much time last year trying to read the exit statements of all of the previous boards to try to understand how they dealt with volatility both directions. And personally, I'm a fan of a smoothing effect, so that we're not always trying to be so reactive in these one-year spot market, ridiculous, it feels so reactive to try to just deal with everything in these little snapshots of time, and having things be much more on a gradual, smoothing effect. For as long as I'm going to be on this board, that's my thinking.
I want to also say that families don't have that option, and so when we're making our determination, I think it's really important to look at, how we want the market to also go. But if we look at even the data that we were provided around like incomes and rents and how those, it's really up and down all the time, and we see rents, people's incomes going down and rents continue to go up, and they're really disproportionate. And so I think that we should also take that into real consideration when we think about, right, we don't want landlords to sort of see markets where it's up and down and really have to figure that out. That's probably true. Some people could feel that way, but I also think that we should also think about what that means in real terms in families, and how the market has continued for a really long time, just disproportionately increased, and their salaries have been going down. And so that, I think, is also really it says something around if people are doubling up and tripling up, then you're going to have more water expenses, you're going to have overcrowding, you're going to have there's just a lot more things that we should also think about when we think about the market, because the market is not just owners making a profit. The market is also people living in there, and a city, right? Because if people can't spend money in their communities, the whole city itself sort of goes into distress. And I feel like we should consider that in thinking and painting a picture, because that's what we're supposed to do, is simulate a fair market. And in many cities, there's people have the choice of living, or maybe living in a better area with more amenities and paying a little bit more, but it's a choice. Here, people don't have that choice because the market is so tight as far as vacancies. And so when people don't have the choice and rents are so high and people are paying so much of their income in rent, I think that also is really good things to look at in balancing out that scale.
I concur. I've always felt that way too. I mean, it's never been again, I'm only speaking for myself, but it's never been something where I think of it as a one-sided equation, much to the owner's chagrin. I've looked at the tenant side as well and understanding incomes and rent burdens, and I think that sort of smoothing thought process, I think, applies also to the way that incomes work in a household, that when times are getting better, and that thing, whether that be unemployment rates or income levels or real income, right, exactly, that shouldn't then suddenly mean a windfall on the other side. So I'm I think I'm like a median girl, or I don't know how to describe it, but I'm in the sort of this tighter range where you're not dealing so much on these outskirts and reacting. It feels fruitless for both sides to be acting in that way. But that, again, that's just my opinion. But I totally agree with what you're saying.
Karen, Harvey. Oh, Sabine, go ahead.
I was going to add.
Sabine, I'm sorry, your mic.
Yeah.
There you go. Yeah, it's hard. The wires are blocking my view. There we go. So just on this timescale thing, I think just a sort of small comment, but from the last presentation, I think it's, at least for me, it's helpful to see some of these changes on a longer time scale, so not sort of 2015, 2014, but going back to sort of looking at how the different parts of the equation have responded since the crash. And at least for me, trying to make sense of some of the numbers, getting some of that longer time scale, I think also helps in terms of, you can have year-to-year fluctuations on costs in different ways, but if we zoom back a little bit, that might also be helpful.
Actually, because I think, for me, it's a balance of what the price index looks like, what's income and expense data that we're seeing, where the tenant hardships, like Shayla was talking about, fits into the equation. and, like kind of what the overall landscape is. And I'm wondering, I mean, I agree that sometimes fluctuations are problematic, but I guess I'm more of a mind of like, it's not about fluctuations. I'm still in this mind of like 2 years ago when we voted for a 4.5 and 7.5% increase, where the data we had, because I was sitting at the table, and the data didn't warrant that. And so I'm still of this mind, like we overburdened tenants and overcompensated owners just 2 years ago for an increase that, based on all the data we had, still wasn't warranted. So I'm still in that head of, well, we haven't ever course-corrected that. And that's still, and I appreciate what you're saying about wanting to have consistency, and I totally agree. But the problem is we have a history of 45 years with inconsistency, which I think the data really looks at overcompensating owners compared to one, if we see net operating income going up, income and expenses going up, where we had 10 or 12 banks reports where there were no foreclosures in any of the properties, because, that means something. Where, HCR came and said that there are no owners who need hardship increases because...
One was granted last year.
One was granted, but no applied.
Those are really,
No, but
by the way, those are...
I have a cousin who owns a rent-stabilized building who applied for a rent hardship increase because I have recommended that he do it. He applied and he got it. So...
Wasn't it less than 1%, though, of the applications were actually...
No, there were no applications last year. I think there's been 12. Owners just don't apply. The reality is if owners apply, they can get them. So I actually feel like we're in a market where it's hard to find the owner that's not doing well. That's really kind of based on what we've done here as a board.
And I will say it's harder for me, and I want to push back on the idea that it's hard to apply, because I feel like we hear it all the time when we are in the testimonies, when the RSA testifies, and we hear like it's hard to do the application. I think it's harder to fight the challenge of an MCI when you have to go to PARs, when you have to get lawyers, where it drags on for years. I think that's hard, and they fight for that because the increases that they get are real. And that 6% increase every year that compounds until you recur your costs and continues to be a permanent increase in rents, I think that that's also like a motivator. So if you're really in hardship, I feel like people will do it. People go to the welfare lines and standing lines and apply for welfare when they're in hardship. And I feel like landlords, if true hardship is happening, they will do whatever they have to do to sort of make that happen. And I feel like that, I think, it should be part of the conversation. The application is hard, but I also feel like, yeah, a lot of things are hard and we make it happen because we need to, and we have no other choice. And I feel like that's where tenants are now. They have no other choice but to get by and pay more than 50% of their income in rent, sometimes 80% of their income in rent. And so I feel like when we're having this conversation, that's also like, it's hard to do a lot of things they do to, get increases also.
We have a difficult job, don't we? I mean, the data, the income data is compelling. It demands a rollback. But the externality can't be borne by the owners completely. And I think, what Victor said, that this course correction, the question is it a one-shot deal? Is it incremental? Is it a new normal? I mean, what do we do? Because we do have to maintain a healthy, as best we can, healthy real estate market. And
I was just going to say, I think a year when owners' costs dropped significantly is a good year to start that process. If you had a year when you had significant increases, I think we should struggle more with what the right balance is there. But this is, given the data, this is a great year, I think.
The data last year was, if we just simply go by the PIAC, it was 5.7%, and we had a 1% increase. So this year, I agree with you. It seems like it's an easy conundrum to resolve just going forward.
And I will just say, like, when the economy was on the floor, like, tenants we saw unemployment rise, we saw, like, everything just go really, I don't even know how to use a word that's not something I shouldn't say here, but it's like things were really bad. Owners still saw a profit. Like, they continue to have profits even when tenants weren't seeing any kind of relief. And people throughout the city were really making choices of like, I won't do this so I can do blank. And landlords saw increases in rent. And it might have been like, it's true, costs were high, but or up, or some years they weren't. Or if they were a little bit. Like, we still didn't see any hit And so the market, a rent-stabilized market, what hit did they take during that time? When tenants were really struggling, and if we don't course correct this year, I think we're just continuing, we're continuing, as a board, we're continuing to just make sure that landlords continue to make a profit, and I don't think that's what we're supposed to do.
Excuse me, our third speaker is here. Sarah, do you want to comment, or should I invite Tim up to speak? What's your preference?
In no way, shape, or form are this is where our mission is to make sure that owners make a profit. I feel like there are plenty of even nonprofits that would sit here and tell you that when you have basically a break-even proposition of your cash flow, it's detrimental to both. One of the things I take a step back. One of the things that I've been most marveled at is that our side and your side often say and want the same things, or maybe not say the same things, want the same things. We want sound buildings that have safe, good environments for people to live in, families, singles, the whole spectrum. We want to be able to service our debt. We want to be, the building needs to be healthy both physically and financially in order for the people in it to have these are people's homes. I recognize that. We often want the same things, whether we realize it or want to even acknowledge it. I don't know. That's all I wanted to say.
So going back to what you said, we all want the same thing. Do you think that this will be a good year to start?
No one has shown me, I've heard the grievance argument quite a bit, but no one has shown me quantitatively that, again, let me take a step back. We're talking about percentages, and whenever you talk about percentages, you have a numerator and a denominator to create that percentage. And I personally hate percentages because everyone likes to not all percentages are created equal because you will probably have a different denominator in them when you're comparing them. When people were comparing PIOCs to the income and expense information, they equated them as the same, but people didn't know actually how those things were calculated to know that they are vastly different numbers. It has not been shown to me quantitatively that on average, over time, over a long period of time, the long view, medium run and long run, that somehow there's been this truly disparate part on the tenant side that somehow owners have been not receiving moderate inflation-adjusted increases in their NOI. Again, I hate even the NOI information because that includes market rate numbers and commercial income. But for the buildings that have all affordable housing in them, all rent-regulated units, what do those NOIs look like? I don't know. No one has proven to me quantitatively that over the medium run and the long run that there's this correction that needs to occur. And I feel like we conveniently create these little snapshots of time that support whatever argument that whether it be the tenants making the argument or whether it's the owners making the argument, we can pull the data points out. I just haven't been convinced.
Thank you, Sarah.